I think we can go to the all-knowledgeable Patrick O'Meara now with the business news. Are you there, Patrick?
Hi Alex, how are you?
Very well. The US Federal Reserve's doing well. It's raised interest rates for the, second time this year. It's a quarter of a percentage point, but that's a 10-year high, isn't it, Patrick?
Yeah, indeed. It's been a long time coming. They've raised it to 2%. That now puts it ahead of New Zealand. We're on a rather modest 1.75%. Look, indicating that the US economy is in good shape and it does need interest rates to keep inflation, or higher interest rates to keep inflation in check. In fact, they're signalling another 2 this year and another 3 in 2019. So, very soon it's going to be up close to that 3% mark, whereas in New Zealand it's still likely to remain at 1.75 for the foreseeable future, well into next year. Now, the implications for New Zealand, and we're already starting to see it, it's really around the New Zealand dollar where most of the initial impact has been. That's started to fall as investors are putting their hot money back into the US where they can get a better return on their money. For the Reserve Bank, they're probably thinking now, well, with the dollar coming down, we should see a bit more imported, or the inflation from imports should start to go up. That may affect the timing of the interest rate rates here. We'll wait and see. And of course, for the banks here in New Zealand, it just may make the cost of funding from overseas just a little bit higher. And that means you and I, Alex, will probably start to see ask to pay a little bit more in our mortgage rates.
There you go. Just going to the US again, I mean, Donald Trump seems to suck all the oxygen out of every other story there. But the US economy obviously doing well. What's mainly driving that growth?
Look, it's been slow coming, and it certainly happened well before Donald Trump was in power, as much as he would like to claim credit for most things that happen. The US households have got a lot of debt down. They've cleared out a lot of bad debt out of the banks. Businesses are starting to invest, and I guess this is where Mr. Trump can actually take some credit through his tax cuts. That seems to have inspired a lot of confidence. The unemployment rate, of course, Alex, is at 3.8%. That's the best it's been since 2000, and it's expected to go lower. Now, wage rates are going up, perhaps not as strongly as what people would like, but it is going up, and they do expect core inflation to get towards that 2% mid-target by this year. So yeah, it's a strong economy. Now, the other side of that is it's not so good necessarily, these higher interest rates overseas, particularly in emerging economies, particularly if they have got US dollar-denominated debt, that's now going up. They're going to have to pay more. So this is the flip side of that.
But that great job rate, obviously not quite the same here, and jobs are set to go at Spark as part of plans to cut costs. What's happening there?
Indeed. We've got about 1,900 workers. It's about 40% of their workforce. They're currently considering new employment contracts as Spark looks to reorganise its back office. Now, these are jobs such as IT, product development, and I've forgotten what the other one is. What did I say it was?
Check your notes.
Yeah, I will. I check my notes. You can never find them when you need. Oh, of course, marketing. How could I forget marketing? Sales and marketing. Now, Spark had already flagged this very early on. It's part of this quantum transformation project that they're underway. They're looking to trim costs, particularly out of their old part of the business. This is the landline side of it. The old it's the rather than the new parts, which is like the online and of course their mobile divisions. Now, what they're saying is that they're going to reorganise the way they do business away from towards things such as multidisciplinary teams. That means they need new job descriptions. What it does mean, though, there will be job cuts, up between 100 and 200 job cuts altogether. Now, people have got a week to consider these new contracts. Now, you and I may think that's actually not a lot of time to consider those contracts. But the company says we've been in discussions with workers since December. They had a formal consultation process which has been going now for a couple of weeks, and most staff they say are generally happy with the direction the company's going in.
And in the meantime, the markets, how are they looking, Patrick?
Well, the NZ Top 50, it rose a whole 1 point to push into new record high territory. It's at 8,978. New Zealand dollar 70.3 US, 93 Australian and 52.5 British pence, Alex.
Thanks so much, Patrick O'Mara, our economics correspondent and business reporter this evening in our Wellington studio.